Okay, hello everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, August 22nd. Michael Boutros here with you this morning. Good to be with you guys. Jitu, Karthik, Mark, Pete, Tom. Great to see everyone here in the room. Hey Carlos, great to see you as well. I'm not going to lie to you. I'm going to say the same thing I said yesterday in the webinar, guys. I'm not really thrilled with current market conditions or current market price action. We're sort of in the summer doldrums here as we head out into the close of August trade. It's notorious time for really low volatility, low market participation. That being said, heading into Thursday and Friday, specifically with the commentary that we're going to get from ECB President Mario Draghi and then Fed President or Fed Chair Janet Yellen at the Jackson Hole Economic Symposium, because we have such short, handed market participation, those can charge some really big moves if anything materially or if anything materializes from those comments. That being said, it's a good time to have your markets kind of mapped out. I'm currently flat, just for on the record here. So looking for new opportunities. I'm not going to put out a trade, guys, just for the sake of putting out a trade. This isn't daily FX. If I don't objectively see something as an opportunity, I'm gonna steer you guys clear. And when things turn, we'll be ready for it. So let's jump right into just the basics. I will take your question, Jitu, on dollar yen. Haven't been following it, but I still think you're above support. So I wouldn't be too concerned. We'll take a look at that in a moment. But here's the dollar index. And just to show you how tight things have been. I mean, here's the monthly open, guys. We're heading into the end of the month. And this thing has held a ridiculously tight range. We called the 92.62 level, which was a really nice swing low from back here in 2015. That caught the low. With the rebound, we were looking for the rebound to stretch towards 94.50. Haven't quite gotten that. And here we are sitting at the 2016 low day close. Okay, and that continues to be right at the 93 handle. So as far as an opening range play for the month, you never really got a clear break and close above the monthly opening range. Monthly opening range lows, same thing. So when the market does this, it's fine to be a real short-term, near-term trader here. You don't want to take any too broad of a stance on the markets because, the trend is just not there. The momentum is just not there. So looking at this thing intraday, again, I've adjusted this slope once more. Here's the pitch. We had this pitch going off of these. We saw a downside break and recovery yesterday. A modified pitch off of these lows seems to be something that I'm working with, but as it stands, guys, the levels remain unchanged. 94 still being near-term resistance. That's where we capped out last week. 94.50, really kind of the ideal scenario for us to reposition, I think, back on the short side heading into September. If we get there. Until we do, it's a range-bound trade within the monthly range. Any questions on the dollar index? I'm going to leave plenty of time, guys, in this session for your questions. So if you have any pairs that you want to review or any assets you'd like to review, feel free to throw them on the message board. What we'll be going through today is pound yen from last night and pound dollar, both of which seem to be making nice moves. We'll recover real quick on the Ethereum trade, which came just pips, literally just cents from resistance before turning over. Euro, Aussie yen, and Aussie dollar. We'll touch base on dollar CAD, and obviously I made a little adjustment to the slope in a gold, so we'll want to sort of review those levels real quick too. So again, anything I didn't mention there that you'd like to review, feel free to throw on the message board. That being said, let's jump right in. So with that sort of picture of more of a range-bound, directionless sort of market in the dollar index, so the breach of this downside channel, again, you're not really seeing much follow through on there. So to go back to last night's update, we'll come back and look at the euro. First things first, I do want to go look at pound yen. This actually played out pretty well. So if you guys remember, last week we were coming into this key support right around 142.15. You had a whole plethora of support, trendline support, the 200-day moving average, the 618 key retracement, and we were looking for a real strong assertive rebound. I noted that yesterday. We were wrong. Okay, we were completely wrong. It broke through support, invalidates our bias. We've been looking lower ever since. Last night, to open up the week, we came right into the 139.84 target to the pip, just a swing low before the reversal on Friday. We were looking to stay bearish below the median line. Resistance that I would have been really interested in getting a short position was up here at 142. Obviously, that failed. We broke through, just missed the median line, and then moved lower. So we're still looking for further declines here, I think, in pound yen. I don't want to get too aggressive on it. Again, the near-term support target's still 39.84, same thing that we hit on Friday. I don't want to get too aggressive on it because I don't, again, the biggest thing here is the yen, right? I don't think dollar yen has too much room, or yen strength rather has too much room. Looks like you're getting some exhaustion here, even on the near term. So take it for what it's worth. Look for an opening range break, but at the end of the day, you may not remain at risk for further losses, basically well below 42.15. Here's what it looks like on the 120. And here's what it looked like last night. So we kind of popped right through and then turned right around back to that median line again. See, you're just not getting follow through. And this is what I'm talking about, the market conditions just not being in our favor to hold extended trades. Real short term, if you had taken a short position, with a break back below 140.70, that's a nice 50 pip gain right there. So if you're playing real short term, these will work great. But if you're looking for the continuation, the larger swing trades, it's just, the market just fails to have follow through. Here's what Ethereum looked like yesterday. We talked about this also in the webinar. Here's what Ethereum looks like now. It turned just pips, okay, ahead of this big target here, which was 347. 786 retracement off the highs. The 764 comes in just ahead, so we kind of probe through that. But I was looking for more of a rally into this median line here, this 50 line for the current operative structure. So we turned just ahead of that. That could be a raised ceiling type of play, which screams exhaustion. In such a scenario, I do think this risks another drop lower. Nothing changed as far as our levels. Bullish invalidation remains 274, 276. So as long as we stay above this threshold, you're going to continue to favor sort of a drop to get long. But again, losing steam real quick, right? Fails to follow through. This was a fresh multi-month high. So be quick, guys. Be quick to pull in your stops and take profits. It's not the market to look for the larger stretch trade. Interestingly enough, okay, we were comparing a little bit last week, and we were looking at Bitcoin prices too, right? Bitcoin, interestingly enough, seems to be at a little bit more of a disadvantage as far as the pullback that it's seeing, a little bit more severe. So use some caution if you're trading on Bitcoin too. This is the trend line that I was looking at yesterday. If it were to break below this, and specifically below these swing highs, I think that you'd risk a much larger move here to the downside in Bitcoin. So look for this rally to surpass these highs to mark continuation. They won't always move together, but certainly, when pressure comes on the crypto block in general, you'll start to see them more or less start to fade. Questions on Ethereum? All right, that is number 4. Okay, let's take a dive back into the majors here. So here's euro dollar. It made a break, and here's the thing with this. I think we need to take a restance on the slope for the near term, but I'm going to see how this pans out. We broke through this resistance. If you guys remember early in the week, here's what the update looked like. I wanted to stay bearish sub 118, basically. Here's what we look like on the Sunday open. So I was looking to stay bearish while below this region to look for the pullback. So does this constitute a break? I don't know. Technically, we closed above it. So yeah, it would technically suggest that this is a breakout. Now the recovery back below, if we were to open the US trade session and find resistance there again, I'd be much more comfortable sort of maintaining that bias that we had opening the week to look for an early week high, which is what we got. So yeah, I mean, maybe I'm being stubborn, maybe I'm kind of just unwilling to move my bias, but I still think Euro has some further downside to go. So if we rally back towards 118, look for some exhaustion. Any stops you take would need to be against the weekly high, so make sure you're comfortable with that type of risk tolerance. And a break of the weekly opening range low objectively would put us back on course looking for that drop towards support. Before you look for that 2016 high guy at 116 that we've been talking about for a couple of weeks, watch that slope, just this median line here. It hasn't been super influential. But that comes in just ahead, right around 116.50. So see if we can stay one sub 118, and if that's the case, look for a break of the weekly opening range to open up that decline towards that median line. Now, what I wanted to do real quick is just sort of a drill. A lot of times when price action changes, we need to adjust as well. Let's see what this slope looks like. Take a parallel. Does that offer any touches? Well, put it here. It's 1 touch, 2 touch. You can see that as sort of a breakthrough. 3 touch, 4 touch. Just missed. A little bit of a spike. Highlights 116.50. Same level. Okay, so we'll work with that. Let's drop these blue slopes for now. We'll still see if we can't stay below that 118 handle. Questions on Euro? Again, for anyone who's new to the room, keep in mind you can always take a snapshot of any of the charts you see presented here by clicking on the camera button in the top right-hand corner of your GoToWebinar screen. So feel free to do that if you need. Okay, moving down the line, number 6. Let's jump into Aussie yen. Jitu, we'll do Aussie and then we'll jump into dollar yen for you, okay? So Aussie yen looks like this. It's still, nothing's changed as far as the update's concerned. It's just lost steam. Again, one of those trades, if I'm going to keep preaching to you guys, same exact thing happened. We talked about this early in the week. Here's the Sunday update. We talked about Friday's real strong reversal off of just a very decent pivot in price, right around 85, 84. You also had the lower median line parallel right there. The previous week, we made a strong defense of confluence resistance again at that same parallel with the 50% retracement. So things were on the up and up, right? Really strong rebound, pullback again, real strong rebound. I'm still favoring the long side here on Aussie yen. Now you're getting some back and forth price action. Here's what the daily chart looks like. Okay. Saw the breakout of this descending formation earlier in the year. We tested the upper parallel as support, held like a charm, rallied. Upper median line parallel here caught the highs. Lower median line parallel caught the lows. Again, last week we turned just ahead. So, I'm looking for evidence that we're going to see resumption. The real level you need to get through to mark resumption is 87.55 into 87.64. This is really the level you need to be to validate sort of resumption to the upside, okay? Till we get that, you need to trade it as a range, but I'd rather be buying at support in this range than selling at resistance. Here's what Aussie yen, looks like now on the intraday. Okay, so here's the 4-hour chart. Here's what the 4-hour chart looked like on Sunday. Here's that Friday bounce. We'd rather be buying pullbacks. If you've been doing that, you've been doing all right. It just hasn't been able to clear that December high day close resistance at 86.93. It's exactly where we topped out last night before really knee-jerk reaction take you right back lower again. So look, you're right back at essentially at the weekly open, just below. On a trade like this, you kind of want to respect the weekly opening range. So if it does break lower, I don't want to touch it. That being said, while within this range, I'll continue to favor buying pullbacks in Aussie yen. Again, ultimately, you'd need to see this topside breach to really validate resumption of the broader uptrend. Questions on sterling, on Aussie yen, excuse me. Again, here's what the 120-minute looked like on Sunday. So we came into this region. We actually pulled right back from the Sunday open, came right into that 86.93, turned over, and we're basically right back where we started. So again, quick to take your profits. This is a good time. Someone had mentioned last week, using the average true range as I used to do much more aggressively, back in the day. This is a good time where you want to do that. So the average true range, guys, the ATR, if you take, a 20 or 14 ATR, a 14-day, okay, ATR, take a quarter of that. And that'll typically be a good sort of near-term intraday target. So you don't expect too much. You're not expecting more than just a daily range's worth of profits. And it kind of puts things, I think, a little bit more objectively in perspective. So, yeah, don't fall in love with any trade for too long. Aussie dollar, number 7. I don't really want to discuss this too much because I know most of you are still holding the swing trade on this. And if you are, I don't want you to sort of add or remove anything from that for a new position. But if you're not holding swing trades on this, still within the confines of this ascending median line formation, I don't know how much emphasis I want to put on this median line formation, although the upper parallel almost caught that stretch pretty nice. So let me just see where the 50 line comes in real quick. Yeah. Not much help. So look, this could get a little bit deeper on the pullback, and on the Aussie, sort of something like this would be ideal. So I'm going to zoom this back and take this to a 240-minute chart just to give you some perspective. This is a median line formation. I haven't touched this, guys. This is the same formation since way back in June. We've just been following it all the way up. Even when we broke to the upside, it acted as support, okay? And on the break, checked it as resistance, came right back. Median line offered some resistance on the way down. The lower median line parallel caught it. Here's the median line again. So I don't really want to stress this internal embedded one, but you could see that a sliding parallel, the same slope was support, break, resistance, break, support. Okay, both times it ran through support, and that converges on that same region. Okay, so let's call it like 78.80, 78.85 is what I would want to see hold as support if Aussie's going to, maintain this upside thrust. Pretty light on Aussie data, so it's going to be really the dollar driver. And again, Yellen's commentary on Friday could be big. Remember, it was Jackson Hole is when we first got the introduction of Bernanke's, QE. It's also where we got, a lot of commentary with regards to central banks in general, making their pledges that they're going to do whatever it takes and whatnot. So, look, the threat of that is there. It's how do you trade it? That is my concern. I don't really care about the story behind it. I just want to know what the trade is going to be. So the best thing to do is to kind of keep your powder dry as you head into that event risk. Like I said, there's going to be very low market participation because of what time of month we are. Last couple of weeks of summer before things really start to pick up in September. So use some caution. A good time to reduce your leverage a little bit, but could get some nice volatility, could get some nice swings. By the way, key resistance on this, if we were to blow through the highs, which is obviously our favorite scenario, 79.67. Okay, that's the level you need to clear to really kind of go nuts with this. All right. Questions on Aussie? Okay, let's take a quick segue here for J2, and I want to look at dollar yen. Listen, it's not a favorite pair of mine right now. I think you know that, J2, but this is what I would say is going on in the near term. He says, I know. All right, cool. I always just want to pad that and preface it. The abomination. Here's what it looks like. So the reason why I said I'm not too concerned, I'm not sure where you're long from, Jitu, but the main support level that I was looking at is still respected. That's 108.90 into 108.77. 108.77 being the 50% retracement of the entire advance from last year's low. Okay, and 108.90 being this year's low day close, specifically here on what is that, April 17th. So on a close basis, you can see we've been unable to make anything, near a close below that. Here's what it looks like on the line chart. Okay, and in fact, this, my friend, is textbook divergence. Price action making a lower low, the oscillator making a higher low. In fact, both of these reference points being pretty close to 50 even strengthens the signal. So personally, I do think you can get a decent bounce off of dollar yen here. It's been hard, to try to fade yen strength lately, obviously, as you can see here in dollar yen. But I do think, it looks vulnerable. It looks vulnerable for a bounce. Jitu says he's long from 109.95. Okay, so your entry was off on that one, right? Here's what the near-term chart looks like. Okay, so you're holding that from last week, I'm assuming? Okay. Okay, I see what you probably thought. This was a bounce of resistance. You probably thought we're going to hold support here, right? And a rebound. I don't blame you one bit. I don't blame you one bit. Jitu, my question to you is this. Hey guys, someone's saying that there's a connection issue. Is anyone else having a connection issue? Can I just get a quick confirmation that we're good on sound? Karthik says good. Oh, okay. No issue. Karthik says it's at his place. Okay. I'll have this obviously I'll have this archived for you, Karthik. Thanks, Rushton. Thanks, Pete. Thanks, Tom. So I see where you went, where you could have thought that this was going to rebound higher. My question to you, Jitu, is where was your stop on that kind of trade? Why do you find yourself 100 pips off? 108. Okay, what's at 108? You're looking for that trend line, or? Okay. So here's what I want to say, guys, and this is something, again, I'll actually be doing a webinar in 2 weeks on daily FX if you guys want to join, where we'll be talking about risk management. But we always want to keep in mind, guys, our risk management, our stops can't be objective, okay? And let me take that back. They should be objective in price, but they can't be objective in that, oh, okay, I want to just risk 100 pips, so I'm just going to put it out at this distance. The market doesn't care what that distance is. You know what I mean? So Jitu, the only thing I would suggest for you, man, I don't want to pick on your trade here, is just that make sure there's something at that 108 level that you're trading against. Even if it's a long-term trade, Jitu, we have to have, a basis of what we're trading against, a level of which, okay, if this level breaks, that's why I'm going to be out of the trade. Okay, X amount away from the trade, that doesn't work for me. So at this point, you've made two concrete lows. You might as well save yourself 60 pips here. I think if this breaks below the lows, you could drop into 107.90. You know what I'm saying? 107.80, and then now you just took an extra 60 pip loss for no reason. See, that's what I'm talking about, J2. Make sure that 108 level signifies something. Make sure that means something. But anyway, I digress. To get into dollar yen, I personally think, again, even on these lows, guys, let me bring this and make it a little bit clearer. Here's the line chart. Lower low, lower low, higher low, higher low. So even on the near-term chart in the 240, you're still seeing the divergence starting to materialize. Now, as I always say, divergence doesn't tell you anything on time, right? We could continue to bobble and make divergence for the next, 3 weeks. But it does suggest that the near-term momentum profile is starting to turn. So look, there's that key level. My humble opinion, Jitu, I can't tell you exactly what to do. My humble opinion, 108.77, 108.92, that's the padded region of support you want to see hold. If that were to give out, my friend, I'd get concerned. I'd get concerned for a much bigger spill. Not my favorite scenario, but just to put things in perspective. Again, it's way too early for this too, but I just want to see. Yeah, it's too sharp of an angle. I don't like it, but look for support here. Near-term resistance unchanged. That's going to be 109.59. I do have a retracement here. I just need to adjust. That retracement's null and void. 100-day moving average is now at 111.20. There you go. Those levels I'd be looking at there. Jitu, does that help? He said I was looking for 108.50 support, but allowed 50 pips in case of a shot down. Okay. Again, it depends on your risk tolerance, Jitu. You know what I mean? I'm all about putting a pad and leaving my pit. If I see resistance at 110.85, sure, I'll put my stop at like 110.95. But for me, even a 10 pip pad is like kind of stretching it. I'm much more aggressive, much more near-term trader, much larger size trader. But yeah, if you're comfortable doing that, then that's your. I'm with you. He says just revise the stop to 108.68 after looking at your charts. Thanks. Hey, more than welcome to too, and best of luck, man. And again, I do like the concept of a rebound here. Just don't get too aggressive. Like I said, I know you're 100 under now. If you get up back towards that 110.25 barrier has been a pretty what was that, monthly open, I think. Yeah, it's the monthly open. So if you get up to that 110.25 barrier, I'd be looking at it. I know that's not much profit from your entry, but you know what I mean? That's resistance that I would respect. And in this kind of market, it's been, hasn't been much follow through. So hope that helps, my friend. Okay, so that's dollar yen, number 8. I do want to touch base real quick on dollar CAD. Hey, Karthik, I see your questions. We'll definitely jump into those in just a moment. Let me just take a quick look at dollar CAD and gold for everyone here. So dollar CAD is a trade that we've been following for a while, but we kind of lost interest of it once it did this, right? If you guys remember, we were loving the long side. We had highlighted this basic slope off these lows and just continued to hold, extrapolated off the high here, continued to hold. And then last week we did this gig where the 127.40 breach had me getting all excited, and then we just reversed and collapsed into the close. So we've now cleared that basic channel support. I do think you risk a little bit of a dip lower here, maybe even as low as 24.14. I wouldn't want to play the short side though. I wouldn't want to play the short side. I still think I don't know. I'm just uncomfortable with really trying to chase this from here. So I just wanted to highlight the levels, look for interim support, the monthly open, a little bit lower, 24.77, 24.60 would be the first area. And then again, like I said, on that intraday, there's not much till way down. Let me just check this out real quick. Okay, so look, actually 25 might be a decent level too. If this is corrective in nature, which I would favor, at least in the near term, that's the first level of support you'd kind of want to focus on. Let's drop that, 24.80. All right, so a quick review there for dollar CAD. Neutral stance with a slight downside bias here heading into 125. I want to see a reaction down there at that confluence Fibonacci level. We just posted a pretty big outside candle right here, taking us to fresh weekly lows. So that looks bearish near term, but I would still be looking for that 25 level, 24.90, to see some sort of rebound off that. Gold. Here's what the gold trade looks like. All right, so the daily chart, not really much going on here to get excited about, except the fact we talked about this yesterday that we're coming off of fresh yearly highs. Here's the yearly highs that we made earlier in the year, back in March. Again, tested again mid-year in June. Here's the other test and a rejection. So inherently, the near-term focus or the near-term risk is for a pullback. Doesn't necessarily mean we're going to, collapse like we did both of these times. I do inevitably think we get the topside break. It just means that near term, you want to be cautious about trying to press any longs until we get through this sort of region of resistance. The intraday chart is very interesting. So here's the slope we've been working with from last week. And sometimes it's prudent in upslopes to use the upslope resistance and then take a parallel of that to the low. Now I've seen that we've kind of like broken through this a little bit, and in time, this convergence on the 236 is starting to decay. So if we adjust this slope to the lows for the advance, let me delete this, make a parallel to the highs. You can see one touch, two touch, obviously here a little bit cleaner, and that opens up our target a little bit to give us a little bit more room. Anytime you deaden the slope, in my opinion, tends to last a little bit longer. In fact, you might have a 1, 2, 3 touch right there. There we go. In any event, a near-term 236 basic retracement just off the lows that we made in July gives you 1278, and that's kind of the area of support I'd expect to see for gold if we're going to move higher. But the initial risk, in my humble opinion, still remains for that drop into this pocket. Keep in mind, again, minor divergence into the highs as we made the last two highs into the close of the month, or into the close of last week, rather, I should say. And you have a pretty well-defined weekly opening range. Here's the weekly open, stretched lower, made a new high, turned. Here's the 120. Pretty objective. Look for that weekly opening range on a downside break. Look for support into this pocket. Maybe even as deep as 1274. Questions on gold? Okay, so let us jump into your questions, ladies and gents. Can we have dollar MEX, dollar Swiss, Euro, Oz, and crude? So I'll take that out of order. I don't have anything on dollar mex but a daily chart, but I'll show it to you anyway. Let me do crude first. I was looking at this morning. I honestly, I have no clue what's going on in crude markets, and I'm not ashamed to say that. If that's how I feel, I'm not going to try to BS you guys. If anything, if you hold a gun to my head, I would say look for a low here to make a new high before this thing turns around, just because of the nature of this advance. But I've tried to examine this every which way. I know this analysis probably seems crazy, but it's not abiding by much. I wanted this to hold pretty big, nice swing low, former upper median line parallel, basic channel support. We made it close below it, so I thought the story was done. Next day we checked it as resistance. I thought that was further confirmation. Then on the 18th, we just plowed right through again. So, it's one of those trades that's it's going to screw as many people as possible before it actually makes a directional break, in my humble opinion. Does that make any sense? Karthik says, haha, me too. Yeah. And you know what, Karthik, sometimes when that's the case, it's best just to sit on the sidelines. Being flat is a position, guys. I know it's corny to say those lines, and I hate using those nuances, but it certainly holds true. And when there's a lack of clarity, like I always tell you, I'm not going to sit there and throw out a trade recommendation or a setup just for the sake of it. If it's not a viable opportunity that I see, we'll kind of stand clear for now. He says, I'm short at 47.62. I'm looking for a target of 46.13. 47.62. Okay, so let's zoom in for this here for you. Rushton says, my best trade, staying away from crude. You ever heard of that saying, Rushton? The best trade I made is the best trade I've ever had is the one I didn't take. And definitely it stands true on some of these market conditions. And trust me, if I'm showing hesitations, because lessons have taught me over the years, when market trading conditions aren't in your favor and you know it, and you still, you're stubbornly trying to press big trades, you can undo a whole quarter's worth of good trading. So you are short, my friend, from 47.62, and you're looking for a target at 46.13. Okay, let me ask you this: what's at 46.13? Is there a level that you're looking at there? Because what I would be worried about, and this is not the weekly open. The weekly open is here now. He says nothing in particular. As per trend line. Okay, you might have a trend line there as well. You're getting me interested in this, man. Hold on one sec. It's gonna be too much, yeah. Okay, here's the excuse me. Here's the only thing I would say, Karthik. Ahead of that target, I would really be mindful of 46.88 into the 47 handle. Not just because it's a big figure. That's just baloney. What matters is what price action has done there. And don't take my word for it. You have a 1618 extension. You have a 50% retracement. If you scroll to the left, look at my cursor. That region has caught swing lows. The break of that region has seen acceleration. It has been resistance. It has been former support. Again, really strong resistance and then rejection. The break saw acceleration. Again, quick break, failure. So that's all I want to say. It's a really tricky, tricked out zone. So if you're holding shorts, as you get into this region, it might not be a bad idea to maybe adjust your stops a little bit, take a little off the table even, as far as profits are concerned. And if you want to try to press the rest of the trade down into 46.16, that's your perspective. But just know that that region is pretty big. If this is just a correctionary move, I do want to see the 100 takes you into 47.32. So still, that's even ahead of your target. All right, so just be mindful of those quick levels on a relative basis. Either way, 46.30, 46.40 comes up like every single way you slice it. So if you see this break, this is your first area. Okay, if you see that break, look for this zone as sort of your next key zone of clearance, let's call it, for this thing to move lower. Does that help? Karthik says, okay, yeah, more than welcome. He says, yep. Russian says, I have learned that the hard way, trying to force a trade, but now let the market give me what it will. Exactly, Russian. That's how you always have to approach trading. The market doesn't give a damn what we want, right? It's going to do its own thing. So all we can do is be positioned for it and, be humble. When the market gives you something in this kind of condition for the market, I take it, period. Or at least play defensive, right? Bring your stops in. Okay, what was the other trades you wanted to do? Dollar Mex, Dollar Swiss, and Euro Oz. So let me do Euro Oz first because we have covered that on the intraday page. Here's what it looks like on the intraday. I still think you have the possibility for another possible rally into this region to get short, but largely speaking, I still want to see a move lower. I count this as a false break of resistance and a recovery. It's same resistance again. So you kind of just want to see this thing start to move lower before even, it wasn't technically divergence, but certainly momentum kind of failing at 60 here. Okay. Bear with me one sec here, guys. $786 is going to be right there. Okay. There are the levels I'd be watching for Euro Oz. Immediate resistance 49.10 to 49.20, this 10 pip range right here. Bearish invalidation 49.58. So you want to find a reaction, look for exhaustion at one of these 2 points. A downside break essentially of yesterday's low. Not even the opening range in my humble opinion. If we clear back below the median line, this pivot line, this trend line extends right off the lows for the year. So if we break back below that, I think you're on course for a test of the monthly open, comes in at 47.96, just below the 48 handle. And then a 50% retracement, just a basic 50 of the advance off the July low, takes into 47.18. All right, so that's Euro Oz. Could see a stretch higher before it turns over again. I'm sure Euro Oz too. I want to have a suggestion for initial target entry at 48.80. Okay, so you're just entry on the long side, on the short side, right? Let's jump into, whoops. Okay, so as far as a target on the downside, this is what I would do. Ooh, August open comes up with the 618. That's right off the bat something you're going to want to pay very close attention to. So again, this is what I want to say. I can tell you based on how I trade, how I would look to target that trade. I don't really know what you're looking to do with that. It's very subjective, right? On how we're looking to play these levels. Personally, I would be looking for initial targets. You're in from 88. Yeah, I'd probably take looking for initial targets right along that same trend line. But the real big one, this would be like a soft target where I take a little bit off. The real big one would be down here and here. Okay, 50% retracement, especially if it comes in time with that trend line. I'd be looking for some sort of reaction there. More importantly, is 47.96, 47. It's exactly 47.96. The August Open and the 618 retracement of the advance. You got a great entry. You're pretty nice close to the highs. Your stop, again, your stop would probably be right against the highs, the best way to do it. What you do have working for your favor here is you have a very nice outside hourly reversal candle right into the highs for overnight, right? So the candle took out the previous candle's highs, took out the previous candle's lows, and was a reversal candle. That's typically, a bearish development near term. So look for those two levels as near-term targets, just on the immediate decline here heading into the U.S. Open. Okay. Dollar Swiss and peso. I'll start with peso just because I absolutely detest dollar Swiss. I know that Jamie will write about it sometimes, but you'll never see me writing about it. So here's peso. I don't have a near-term setup, but here's what I'm looking at in the daily. And the last time we really focused and we wrote a piece about this was that we were breaking below this trend line that dates back to the 2015 lows. Okay, we came back, tested it as resistance. It was also the underbelly of the lower median line parallel here. That acted as resistance for a few months until we came into this big level. Now, I personally thought we were going to get a bigger bounce here. You had some strong divergence into those lows, and then we made it right back above the 38.2. I thought this was going to give us an advance back to the median line here. We were wrong. We broke back below and keeps the focus really lower while below 18. So, there's nothing for me here. There's nothing for me here to trade. If we were to clear 18 back to the upside, I think that's, the turn that we would be looking for a little bit more of a stern recovery here. Tack on a quick retracement, target a basic 236, cool. But from here, you're likely to get chopped up, just continually chopped up, a little bit lower, a little bit higher, a little bit lower, a little bit higher. I don't really have a very strong opinion on peso here. Here's what the intraday chart looks like. Let's take a look and see if we can't clean this up. So, look at it, even a basic channel break, fake out, then it offered resistance, which would keep your focus lower, but we're losing steam at last week's low. So it's like, what the hell do you do with this thing? That is ugly. Something like that, maybe. Let's see if there's any symmetry here. Nope. Nope. Yeah, I mean, there's nothing from here. If you put a gun to my head, ask me, Boutros, what do you do right now? I would say sit on your hands, wait for a drop near 1751, 1757. Maybe look for a reaction there for an opportunity to play a rebound. But, this is not for me. And especially when you see that price action is not respecting fibs, it's not respecting extensions. Breaks of channels and supports haven't been all that. You haven't seen that acceleration. So your target 1776, and your target is 1752. So yeah, I like 52, right ahead of the 100% extension. So if this is corrective, that would be just a simple target. That makes sense. The 786 retracement comes in. It's not really in line with the low, but maybe 5780, or 1258 might be something you might want to just keep on the radar, just because, again, it looks like it's losing some steam. So I'd hate to see it see that gain erode away. But yeah, it's not the cleanest setup in my opinion. Last but not least, you guys are throwing me curveballs all day today, huh? Let's take a look at dollar Swiss. Okay, as you can see, nothing's been done on this for a good amount of months. So let's just clear all the nonsense. Take a look at the daily. Ugh. Okay, so here's obviously the intervention, and this is the last time I ever even looked to touch this thing, back in 2015. We had a trendline support, or a nice slope that we were working with for quite some time, which broke back here in May, keeping the focus to the downside. Here's the recovery and reversal back below the lower parallel. Let's see what we can do. Rushton says, yeah, but you're up to him. Of course, Rushton. I'm just playing with you guys. Feel free to throw anything you guys want to look at. I'm always down for it. Hey, maybe it's a great trade that I'm not even looking at, and it might be a good opportunity for me. So I'm just kidding around. Yeah, always feel free, guys. Okay, I'm going to use that for now. Okay, so check this out. There's a whole lot of things. This is the daily chart lining up here. You got a basic 618 extension from the advance off the lows. You have a basic 38.2 retracement from the decline off the yearly high. So taking into account just this year's price action. and also a 138.2. So basically, we can take the 50 line of this range. We can also extrapolate that using fibs. So this is a 138.2 of the range extended off here, and that caught the highs precisely here. All of those converge right in this region over the next day or so. Over the next few days. So I would be watching that. You have the 100-day moving average just ahead as major resistance. Support, and again, this might get messy, but just bear with me. Let me clean this up. We don't need this anymore. Yeah, look, there's a lot here, but this is what I'm going to say. Immediate support, I would put right here, Karthik, 96.05. Bullish invalidation, I'd have to leave it in this range, but basically down here. Okay, this is the low day close for the year. If we were to clear below that, I don't think we should. I don't think you should be trying to fight it. Let's just say that. In fact, if we add the 50 line here, I bet you intersects right there. Boom. That's sexy. So we'll use this as our near-term bullish invalidation. Interim support here. You know what? Don't even worry about the 618. Topside break. You know what the key resistance levels are to the upside. All right. Hope that helps, Karthik. This one at least has been getting a little bit more play back and forth. So I guess if you had to trade something, might be a good idea. And we got the peso. So any other questions before we start to wrap things up? Okay. Euro peso. We got crude. Okay, I was just jotting down what we spoke about today. Okay, guys, so if there are any other questions, we'll go ahead and wrap things up for today. Again, listen, if you see a little bit, if you see the intraday charts are a little bit light, don't be discouraged. We're going to get the return of volatility. It's likely to happen fast, and when it does, we'll have the setups for you. Until then, don't be too stubborn. This FOMO, fear of missing out, I want to be in the market, is a very, very dangerous thing in these conditions, okay? Because, you'll just get, you can just get chopped up. So as conditions improve, so will the number of setups that we're going to be providing. Keep in mind, heading into the end of the week, it might actually get quieter until Thursday and Friday, when things could really start to get some fireworks as the economic symposium at Jackson Hole starts off. Till then, be cautious. We'll keep you updated on the SB Squawk. Best of luck trading, guys, and I'll see you tomorrow morning. Cheers.